Hey, I'd like to welcome you to another episode of Mission Matters. My name is Adam Torres, and if you'd like to apply to be a guest on the show, just head on over to missionmatters.com and click on Be Our Guest to apply. All right, so today's guest is Olivia Albrecht, and she's founder and CEO over at Artemeter. And just so you know, this is part of our Milken Global Conference coverage series where we bring on the best of those that attended, panelists, speakers, VIPs, all of the above. Olivia, welcome to the show.
Thank you so much. So nice to be here.
All right, Olivia, so we got a lot to talk about today. I definitely want to get into the work that you're doing over at Artemeter and also scaling the energy transition through capital markets. But before we get into that, let's talk a little bit about the conference. So Milken Global Conference, I know you were here this year. Is this your first year? Have you been before? What's the connection? How'd you learn about the conference?
This has been my fifth year attending the Milken Global Conference.
Oh, so you're a veteran. That's awesome.
Veteran. Yeah. I always like to say it's like being a kid in a candy shop. If you're intellectually inclined and want to learn about a lot of different topics, this is the place to go. It's all the best thinkers across a really unique set of topics that they cover, from health to science to AI to energy transition and U.S. policy and international policy and frankly, everything in between. This is the conference to be at. So I'm really honored to have been a participant and a speaker for the past several years and just love this conference. I think it's the best. It's the best in the world right now.
A kid in a candy store. I love it. I've heard some of the things people have said is, for me, I call it the Super Bowl, my Super Bowl every year. I've heard other people say it's like the Disneyland of conferences. I've heard it's brain candy, people running from each one. So I'll just say that, it keeps people coming back year after year. What I also notice is just this kind of community that just forms and over time. I mean, I'm 3 years. I think this was my fourth year actually in, and it seems like the conference gets bigger. I mean, this in a good way, security tighter. I mean, it's just like higher and higher pedigree every single year. I'm like, how do they outdo themselves? You turn around and you're looking at, a meeting and talking to people that aren't normally all in the same room at one day, let's just say. I mean, it's just fun. I like it.
What's really interesting about the conference, too, is as I've matured in my years attending, I realized that so much of the conference quality and the connections are actually happening behind the scenes. There's private sessions that happen where it's less about having a panel speak at you, but rather being part of a conversation with 30 people behind closed doors. So not only are they curating just incredible content kind of publicly in front of stage, but rather behind the scenes as well. People don't notice this, but there's a lot of small group sessions happening that the Milken team is actually putting on as well, where it's a curated conversation for an hour behind closed door, Chatham House rules. And those are really valuable in terms of getting some really hard content out there where you can workshop solutions in a private setting as well. Yeah,
great stuff. And thank you for bringing that up. I think somebody else has brought that up yet. So a great angle and take on what's actually taking place. So thank you for that. Let's switch it up a bit here. So, first off, tell me a little bit more about Artemeter and what you're up to.
Sure, absolutely. So at Artemeter, we are at our core a carbon investment management firm. We act as a subsidiary to one of the world's largest global trading firms based out of Chicago called DRW. We effectively act as the investment arm for DRW to invest in carbon projects around the world. We have a very flexible mandate, which makes us unique in terms of providing capital into the carbon markets. We can often look like a trading firm where we are buying as an off-taker carbon assets to then go find a home with buyers of those carbon assets and helping to create consistency of cash flow for project developers. In other instances, we're directly financing projects that are removing or avoiding carbon or other GHG emissions from the atmosphere, where we look more like a project finance arm. And lastly, in other circumstances, we're actually investing in project developers themselves, so we can look like a venture capitalist as well. So from that sense, I think we're unique in our flexibility of our mandate. And also, I think that one of our unique investment theses is that we are really looking for the diamond in the rough. We are looking only at the top 5% of project developers and projects related to carbon around the world. We're often kind of helping identify the next big project or the next big technology advancement that we can help bring to market and help create credibility and transparency around those projects as well. So I think we're uniquely positioned as a carbon investment manager. We've got a great and deep partnership with DRW, a global trading firm, again, based out of Chicago. And we've got a very flexible mandate in terms of the style that we can invest and also the types of projects that we're looking at globally.
That's amazing. How did you, of course, I see the, founder title. How did you come up with the idea for this firm? Like, how did you get started in this business? It's so interesting to me. I'm always curious how people get into what they do.
Yeah, right. The long story here.
Did you go to school for it? You know what I mean? Like, I didn't go to school to be a podcaster, obviously, right? I don't know if they were even around back then.
That would be cool.
But I know,
that
right?
Would have been helpful.
Wasn't that cool?
Look, like for me, I've always been interested in the intersection between public policy and international finance. I grew up outside of D.C., so I was kind of familiar on the public policy side. I went to school in New Jersey and then in New York City. I like to say I frequented the Amtrak Northeast Corridor a lot, that intersection between, New York and D.C., and that really just is very interesting to me. So I left graduate school and went to a global macro fixed income firm based out of California called PIMCO, which is a $2 trillion firm and really is kind of the living embodiment of the intersection between public policy and capital markets. And so for me, as I progressed in my career, I was looking for what is the next wave in asset management and capital markets? And I feel really strongly that wave is around decarbonization, around a global energy transition away from fossil fuels toward abundant renewable energy sources and transitioning the global economy to one that is a decarbonized economy. So got myself more and more involved in that part of PIMCO. Ended up kind of leading the team focused on those efforts from a large asset manager. And then ultimately realized that while $2 trillion managers is powerful, it's like moving a tanker ship, right? Like it's a very large entity. And there was a lot of opportunities at this stage in the market development to deploy capital in the $5, 10, 15, $20 million range that unfortunately for a multi-trillion-dollar asset manager, it's just too small. It's just too small. So given those inefficiencies, I said, I got to go out on my own and try and build it and take advantage of these opportunities and deploy capital into really incredible projects and programs that have a pathway to scale, but today only need and require, smaller doses of capital than what the big $1 trillion managers can provide. Yeah.
Let's take it a step further. So how are capital markets involved in the energy transition? Like what makes it so unique and maybe even the thought process of like it being a scalable investment opportunity?
Yeah. Look, capital markets are the cornerstone of any transition and any industry, whether you like it or not. And for me, I looked at the energy transition. There's a lot of scientific work that's required. There's a lot of groundbreaking technology and science, and you can name so many institutions across the United States and globally that are focused on the science side. And I give a massive hat tip out to UCLA, out to Columbia at the Climate School, Stanford, Princeton, so many others. But for me, given my background and experience in capital markets, I also know how important capital markets are for funding efficiently the transition. Because while there may be a good idea or a technological advancement, if there's no funding for those activities, and if there's no efficient funding for those activities, they actually don't occur. So capital markets are the foundation of innovation and economies. So they play a critical role in the energy transition. And I get it at the core, I'm a believer in market innovation for, making large scale changes as opposed to government intervention, which we've seen kind of play out over the past several years, and some of it worked well and others of it didn't work out as planned. But as long as we understand as investors what are the risks and what are the opportunities associated with new technologies and new innovations, I think it's our job to then price that risk and to provide capital to see those opportunities scale. So I think that's a perfect role for capital markets to play in the energy transition and helping to create those innovations and solutions to scale new technologies and new industries to help go forth into a decarbonized economic system.
Talk to me more about opportunity. I mean, where are investors finding the opportunity right now and in and around the carbon markets?
Absolutely. So for frame of reference, the global carbon markets today represent almost $1 trillion marketplace, which is a really large number. It's on par with some of the mortgage asset-backed securities that are out there, not as large as the agency mortgage market, but certainly on par with some of the non-agency mortgage markets as well. So it's a large marketplace. The reality is that the majority of those assets are based off of cap and trade schemes. So effectively tax certificates that get traded by obligated parties who require more or less of those tax certificates given the emissions that they emit on an annual basis. So while there are opportunities certainly trading the cap and trade schemes, given expectations in terms of supply-demand imbalances in those markets, where those programs over time will reduce the overall supply of these tax certificates to help encourage emitters and obligated parties to reduce their emissions more quickly over time. And then the demand side of the equation with the obligated parties having more limited solutions to reduce their carbon emissions footprint, so they'll therefore need to buy more and more tax certificates. There's certainly opportunities there. But for us, I think we're really interested in making an environmental impact as well as, deploying capital into appreciating assets. So for us, we're very much focused on looking at projects that help generate compliance credits for demand that's obligated. So the demand is required. And I think we're a little bit less or more sanguine, shall we say, on voluntary carbon markets where, there certainly is demand from maybe the top 50 players in the voluntary carbon markets, mainly the major tech players, consulting firms, and to a lesser extent, the financial services industry. I think we've seen more tepid demand than we were hoping to see as we head into 2030. So we're more cautious in those marketplaces. But what we have seen is that there are plenty of impactful projects that are being pulled into compliance schemes to help generate the consistency of demand that's required for capital markets and investors to participate in those markets. So that's where we're finding opportunity, that pull through between voluntary projects that are now getting pulled into compliance schemes that have a direct environmental benefit, not just trading tax certificates.
Now, I can't let you off the line here without talking a little bit about the current U.S. administration. How do you see that administration impacting the trajectory of the energy transition and really just investment opportunities right now, like the current marketplace, more broadly speaking?
Uncertainty is really never good for investors, whether you're talking about the S&P 500 or you're talking about crypto policy and Bitcoin pricing, for example, too. So I think some of the challenges in a change of administration from a Democrat to a Republican is simply the uncertainty that flows through from the transition from one administration to the next. So I think every day we get more visibility into this administration's objectives and vision for energy markets. It becomes easier to make investments because you have more certainty for what the policy is. While it would be great to have policy as a tailwind, the reality is even if you have policy as a headwind, at least you can prepare and price risk accordingly. So I think part of the challenge of the past 9 months has just been some of the unpredictability of policy, potential changes and actual changes that have occurred. What we are seeing in the U.S. in particular is that the energy transition, I think, is alive and well in the context of, an abundant energy plan where it needs to be an all of the above solution. The reality is with data centers coming online, with AI solutions, with Bitcoin mining activity, with any number of highly energy intensive activities, that are really fundamentally changing the demand for energy means that we have to have an all-of-the-above solution set. And I think this administration is very fixated on providing an all-of-the-above solution. They're not looking to shut down renewables to be pro and exclusively pro, for example, coal. They just want to see all of the above. They need to see all of the solutions. And all of the solutions have to stand on their own 2 feet without having the interventions. So from our perspective, look, on the voluntary carbon side, I see this market as an extension of philanthropic activity, where I think there's a high correlation to cyclicality. When there's greater profits at companies and the economy is doing well, they will spend more on voluntary carbon credits because, as its name suggests, it's a voluntary activity. So if you have surplus profit at the end of the year that you can utilize for these activities, you will. But if the economic constraints pull through, then it's more difficult for companies to choose to voluntarily participate in that market. That said, I think that you're seeing a lot of the hyperscalers, not bat an eye at their targets and then their vision and objectives for the energy composition of their business activities. We don't see that changing, and we see a lot of teammates in those industries looking for more and more unique solutions where we're looking at waste to energy assets. We're looking for creative solutions that maybe don't have deep technical innovation, but rather we're looking to do more with less. And I think that is a really powerful concept that will help accelerate the energy transition in this next phase over the next couple of years. How do we do more with less? Not how do we come up with a new, bench solution in a laboratory that may scale or may not, but rather how do we do more with less? How do we convert waste to energy, waste to asset? And I think that'll be really powerful in the next couple of years.
Amazing. Well, Olivia, this has been fun having you on the show. I mean, this is great. Great knowledge.
Pleasure.
And appreciate you lending it to me and educating me and the audience. That being said, if somebody's listening or watching this and they want to follow up or they want to learn more about what you're up to at Artemeter or otherwise, how do they do that? How do they connect?
Well, feel free to ping me on LinkedIn. I'm pretty active there. But also our website is at www.artemeter, ARTEMETER.com.
Wonderful. And for everybody listening, just so you know, we'll definitely put some links in the show notes so you can just click on the link and head right on over. And speaking of the audience, if this is your first time with Mission Matters and you haven't done it yet, hit that subscribe or follow button. This is a daily show. Each and every day we're bringing you new content, new ideas, and hopefully new inspiration to help you along the way in your journey as well. So again, hit that subscribe or follow button. And thanks again, Olivia, for coming on the show.
Pleasure, Adam. Thanks so much for having me.